Hey everyone, welcome to CoveredCall ETF Investing. I'm Jordan and this is your central hub for deep CoveredCall ETF data. And today's video, what I typically do on basically the first Sunday of every month after I release what's called the CoveredCall ETF ALLSTAR tracker, which is a Google sheet that I developed to identify opportunities, red flags, changes in the CoveredCall ETF landscape. And that I've also made that Google Sheet available for you all to access on my Patreon. But again, I do a video once a month. That's usually a long form video, something 30 minutes, 35 minutes, sometimes longer, of what those changes and opportunities look like. But what I feel like when I make those videos, I feel constrained for time. When I edit the videos, I feel like I need to chop it down in a way, edit it in such a way that ends up, I believe, taking out key details just for the sake of time. And I really want to feel unshackled from that. So going forward, I'm going to do those long form videos. I'm not going to worry about time. However long the video takes, that's how long it takes. I can go through all the details across the entire tracker, especially if you're new. I kind of want to highlight some of those changes if you end up watching these videos. But what I'm going to do with the long form videos is port them over to my Patreon page so you can watch a fully unedited version there. But for those who are not subscribed to my Patreon page, I'm just going to take that long form video and basically edit it down into real bite-sized chunks and then release them throughout the week, probably most likely Tuesdays and Thursdays. And that would also kind of give more credence to the whole, this is your central hub for deep CoveredCall ETF data, because it's based off of that Google sheet. So I think that's another good way to live up to that intro that I introduced myself at the beginning of every single video. And also, I think it'll benefit you all from just, instead of taking in 40 minutes of data, which can be hard, I will be honest, I can find that hard as well, depending on what that kind of data is. If it's CoveredCall ETFs, I'm fully on board. I'm watching it with full intent if someone else is making it. But that's not everybody. I geek out on this stuff, obviously more so than most. And that's why I have a channel about it and create other various forms of content around it. So let me know in the comments about what you think about those changes. I think it's a win for those who are Patreon members. You guys can see the long form stuff right away. It's a win for just the general audience. It'll be chopped down, more bite size, and it just gives us an opportunity to catch up, get with the language of CoveredCall ETFs, the stuff I talk about. So in this video, what we're going to discuss is changes to the tracker. We'll talk about yield, and we'll talk about distribution changes here in the month of May. And we're just talking about Canadian CoveredCall ETFs. So let's get into it. Hey everyone, okay, welcome to the first condensed version of the ALLSTAR, or the CoveredCall ETF ALLSTAR tracker review for the month of 2024. So the first thing we're going to do for this month is just go through some of the changes that I've made to the tracker this month. For those who have kept with me since the release of the tracker in January of 2024, I've basically added tabs down here to track yield and AUM and average 3-month volume, along with distribution history, and also a tab for taxes, T3 taxes as well. All handy tools in your arsenal to build out a portfolio, a tax efficient portfolio. A portfolio that is liquid, of course, when we can see things like AUM and we can see things like average 3-month volume in combination with one another. These are good indicators whether a fund is actually healthy and is doing well and what have you. So those have been the overall changes, but let's get into the changes for this month. So first off, what I've done is for all the fund names, I've basically added a hyperlink so you can go straight to the fund manager web pages without any hassle. So that's what's new. I would say kind of the more bigger change this month is that, you can just click on one of these and go straight over to the fund manager pages. The next change is I've added sector columns in the yield tracker. So before it was just you would see region and then it would skip over to year-to-date change, monthly change by percentage. So I've added in fund category so that you can actually have a way to filter this by your favorite sectors or look for opportunities in certain sectors instead of trying to bounce around. So that's what's new over in the yield tracker, the AUM tracker, the average 3-month volume tracker, and distribution history. Now, the next change that I made was it was much smaller, more kind of nuanced. It was just the language here in the notes. So you'll see in the top corner here, I've added, there's a little black space, and that's where if you hover over it, I've just cleaned up some of the language for some of these spots. I've also been a lot more clear with CI funds. I thought it was important to basically, no doubt if you're looking at CI, CoveredCall ETFs, if you scroll all the way over, basically they do not release distributions monthly. So I needed a way to just make a note that the yields you see, that's basically off of a distribution that is, I believe, a March distribution, as they release quarterly and they're also variable. So what you see here is basically, call it, I think, December and March distributions in here for CI. So needed a way to just make that clear. Let's see. Also, too, what's new to this month is I've added roughly 13 funds across the Canadian CoveredCall ETFs and American CoveredCall ETFs. And I just put a little description up here saying that if you see something with 3 stars beside it, that means that it's new to the tracker this month. It doesn't necessarily mean that it's a brand new fund. Now, in this case, HIND and HBIG and HBUY are brand new funds, but there's going to be other funds that aren't necessarily brand new. But at least to the tracker this month, these funds are brand new, but also new to the tracker. And I want to say the other Canadian one I decided to add in was CBNK by Mulvihill. Very interesting strategy. It basically allows for full participation. Those who are familiar with CoveredCall ETFs would know that there's this aspect of portfolio coverage, which typically drags on the price performance of the fund. Versus versus a regular version, say, of the fund without any CoveredCall strategy on it. So this allows for full participation with the big 6 Canadian banks. It has 25% leverage, but it writes CoveredCalls on that 25% leverage. So pretty interesting there. So if that's something that's interesting, it's got about a 9.84% yield. The other funds that are Canadian based, again, are HIND, which has a yield of 7.13%. It has 33% coverage on the portfolio, which goes in line with all the other sector funds by Harvest. Then there's HBUY and HBIG. These two, I would say I'll start with HBUY. It basically combines, it's almost like an HDIV, which takes all the sector funds, but then adds a level of fixed income with HPYM and HPYT just become a much bigger players in this fund. So it's basically just HDIV with fixed income. And then HBIG, it's like HDIV, but it has 25% leverage on it. So HDIV has 25% leverage on it. HBUY is basically the unleveraged version of HDIV with fixed income, if you can track with me through all that. And then HBIG is just the sector funds and the fixed income together with 25% leverage to make this, basically balanced funds, right? Your typical sort of 60% equities, 40% fixed income. So with those changes, and the updates to the tracker, let's actually talk about yield. Now, some of these yields, as we'll go through, we'll filter it from highest to lowest. Why Tesla always seems to be at the top of the heap when it comes to yield. It's a single stock ETF. My general rule, well, for myself anyway, is I don't invest in single stock ETFs. It's way too concentrated for my liking. I like diversified funds. I like sector funds and broad market diversified funds as well. Now, the next couple of tickers that you see here, Bank. I actually really like Bank. I plan on owning Bank once I max out my TFSA. This fund is going to help fund my house rental cost next year when I decide to sell my condo with my kids and my family and we decide to move. So this is going to be a big player come next year. I like the fact that Bank has that 33% coverage. It's also leveraged, but the fact that more of it gets to participate and grow. Also, over the next year, it just gives me opportunities to gather more info, especially through the tracker on Bank. ENCL, another big player in the energy space. It's a pure Canadian energy player, 10 funds roughly in it. And at 17%, I want to maybe say it hit almost 19% maybe a couple months ago, but still an amazing yield at almost 17%. It has 25% leverage. The unleveraged version, of course, is ENCC. HPYT, very popular bond ETF by Harvest. I want to say this is probably one of the highest yields I've seen from bonds. Bonds have recently just gone through, have gotten hit recently. I think as markets were hoping and anticipating, once again, interest rate cuts, but that doesn't seem, that once again, Bank of Canada and the Fed are just prolonging that, which just has put downward pressure on bonds even further. Going through the list of these kind of other higher yielding funds, you got UMAX. This is a fund I really appreciate. Hamilton Utilities Yield Maximizer ETF. This is probably the highest yield it's been at since I've been tracking yields, which I'll show you guys in just a moment here. So a good pickup right now, especially before those interest rates decide to decline. Utilities might, if you're looking for something in utilities department, I think UMAX is definitely a decent pickup at the moment. I'm a little bit down on UMAX, maybe around 6% or so price wise, and I think total return I'm up something like 2 or 3%. So I wish I could buy more UMAX at the moment, but it's going to be part of my taxable account next year. Basically, that taxable account is going to make up UMAX, ENCL, and Bank, as I believe these are the industries here in Canada that just make the industry go round and round, and they're going to be pure income plays. I typically say that I'm yield-seeking, growth-leaning, but when it comes to the taxable account, I'm going to be pure income in that regard for that. And of course, with these three funds, very tax efficient as well, which you can check out over here in the tax tab, and you can get basically a percentage of what is capital gains, eligible dividends. Really handy if you're looking for some tax relief. This is, I think, a really good way to filter out and also use that to pick funds. Okay, so let's move on to sticking with yield, actually. Let's go and see what sort of yields have increased this month. And we're just looking at Canada at the moment, so let's take out US and let's see. So the biggest increases in yield this month is by purpose, the single stock ETFs. I'm not really surprised by that, but me personally, I'm more interested in the more diversified stuff. Again, the sector funds. We see that HDIV, HYLD, EQCL, and GRCC make up the bulk of the biggest changes this month, which is no surprise. A lot of the Hamilton and the Horizons funds have increased their distributions. Pretty surprising, actually, to me, but again, we'll get to that in just momentarily here. I'll kind of go through the list slowly. What else kind of sticks out? We get a little bit with BKCL. You can see that distribution-wise, it's the highest it's basically ever. It's since we've been tracking. Maybe there was periods in between that maybe it's hit above 16, but at the moment, hey, it's at the highest it's been, so maybe some opportunities there. Of course, with higher yields means there's just downward pressure on price. So kind of going through this a little bit slowly just so that you guys can kind of consume it easily for yourselves. Let's go actually to the bottom. What has decreased in yield this month, which would typically indicate that they're price increases over the past month. So a lot of CI funds, which again pay quarterly distributions, variable, but nonetheless, we can see kind of a mixed bag down here at the bottom. But anyway, let's go into distribution history, and we can then see just what exactly has changed month over month. All right, so now we're looking at distribution increases. Here, I'll show the April distributions and the May distributions. So this is what has increased month over month. So TXFB, it kind of feels like, that's month over month. But there's been a lot of volatility this past month, especially in technology, and that is exactly what that fund is. But again, like I said, I'm more interested in the diversified stuff. CI will typically be somewhere near the top as their distributions bounce around quite heavily. But let's see what I was just chatting about a little bit earlier. Hamilton and Horizons. Hamilton, to my surprise, has now increased its distributions. Not even halfway through the year, and its distributions are now increasing for a third time. We saw that small point, I would say 0.1 cents to start January. And then when they completed their internalization, kicking out those third-party funds, getting rid of those third-party fees, they were able to eliminate those fees, and we got a big monster distribution in that with that. But now they've raised it again. Both HDIV and HYLD up another, as you can see, HDIV up 9.27%, HYLD up 5.34%, and other various Hamilton funds have also increased as well. Their sector funds, the newer funds, have increased as well. But this is just great news for us, everybody, especially if you are HDIV and HYLD fans. How Hamilton continues to do it. I felt like going into this year, this would be Hamilton's year. I felt like Horizons was maybe just edged out anybody else in 2023, especially with some of their sector funds that they added leverage to, like ENCL, BKCL, CNCL, and USCL. Awesome funds that I own, some of them, ENCL and USCL anyway. Whereas I feel like not even halfway through the year, and this is probably Hamilton's year, by far and away so far. Not that the other fund managers haven't done good stuff. I think HPOIT, even though it got introduced last year, is a good addition for those who want covered calls on fixed income. And of course, anyway, so we see some changes here month over month, and then going down the list. Oh, let's also not forget, we can't forget, also by Horizon, EQCL and GRCC with 7.69% raise and a 7.14% raise. So great to see that from those distributions. And then as we head down the list here, we see a lot of 0%, which, for a lot of people that might seem kind of boring. Oh, a bunch of funds didn't increase distributions this month. I gotta say, and we gotta temper our expectations. If you see 0 month after month after month across all of these funds, and maybe you see a few funds down here that didn't raise anything, I'm still excited when I see this. All of this. This is all still exciting to me. It just means that, the covered call space seems pretty healthy, seems pretty stable. And then the distribution increases are just icing on top of the cake. I never want it to be something I expect. It is nice. It's of course good content to talk about and speculate about. But at the end of the day, if we can just maintain this, I'm perfectly happy with that. Anyway, let's go down to some of the ones that decreased in that had slight cuts. You'll notice that it was a bunch of Brompton funds, and when we're talking cuts, we're talking barely any cuts here. So yeah, this is nothing at all. I'm not concerned with Brompton at all when it comes to this. I still hold BMAX, which holds basically all these other funds. I'm happy with BMAX by far. It has been such a stable buoy in the portfolio. It never seems, even when the market seems to go through these pullbacks, it's still it is definitely, I would say, in the top, third of performers. And that's just on prices alone. We add in total return, and again, it's still up there. So I appreciate BMAX. It's definitely not the highest yielder, but again, it just acts as that really kind of nice stabilizer in the portfolio. So its dividend streaks on a lot of these funds come to an end. Some of them were 60 months, 70 months, unfortunately, but in my mind, they're still well performers in that regard. And then, of course, we got CI down at the bottom here. Not single stock ETF, but just they bounce around. Like I say, I can't harp on that enough. I feel like, if CI, took a more stable approach, you know what, I feel like we'd obviously have a lot more to talk about. We wouldn't keep saying the same thing over and over with CI, which is variable distributions, pays quarterly. I would love to add another fund manager diversifier into my portfolio if CI just paid out more regularly. So anyways, let's go on to some other changes with performance. So we'll kind of skip over trailing 12-month yield. This yield, in my opinion, is not as important as the forward yield. I included this in the tracker, forward yield, and it's in bold because that's basically taking the most current distribution and basically taking that current distribution, multiply it by 20, or I should say 12, and then divide it by the share price. And this is the distribution you're to get if the distribution was stable for the next 12 months. But some of these funds are newer, which trailing 12 months, some of these funds just haven't been around for 12 months. So that's why you see some really small yields here, like EMAX. It has this forward yield of 11%, but it has this tiny little trailing yield of 2.67%. It's much more important to go with this one, in my opinion. So I don't pay much attention to the 12-month trailing yield, but maybe some of you will get some value out of it. So that's why I keep it in there. All right, everyone. Hopefully you liked that condensed down version of the CoveredCall ETF ALLSTAR tracker. Just remember, if you want to view more information from the tracker, I have a fully unedited version on my Patreon page, so you can go scope it out there for yourself. Just remember to hit all the buttons of the like and subscribe variety, and I'll see you all in the next video.